Today's rate hike will affect areas in Australia's largest city and some regional hotspots in NSW. Homeowners in NSW and Victoria are expected to be hardest hit by a historic RBA rate hike, with wealthy suburbs expected to suffer as rates rise. Finder compares average monthly mortgage repayments to monthly household income across Australia's suburbs to identify the 10 most mortgage-stressed suburbs. Homeowners in Sydney's Darlington were the most likely to experience mortgage stress, with average home loan repayments at 105% of median household income, analysis by the comparison site showed. The coastal towns of Blairgowrie, south of Melbourne CBD, and Mullumbimby, near Byron Bay, are expected to face similar pressures, as repayments make up a significant portion of average monthly income. The chart calculates the average house price in each suburb based on recent house and unit sales. Suburbs in the top 20% of household income were also excluded from the list. The study has some limitations, such as the inability to detect the number of suburban homes owned by non-local residents and higher retirement rates, which affect the income figures. The data also used household income data collected 6 years ago from the 2016 census. A full list of the worst-hit suburbs can be viewed below. Social housing advocacy group Everyone's Home surveyed more than 52,000 Australian households to determine which suburbs were most likely to default on mortgage payments. The survey found 73.6% of households in Chifley, Sydney workplaces, including Mount Druitt and Rooty Hill, were under stress. The wealthier seats in Mitchell's Seat, currently controlled by the Liberals, include the suburbs of Balcombe Hills and Winston Hills, which are heavily affected by pressure at 73%. In Sydney's south, 70% of mortgage holders in the Labor seat of Barton, which includes Rockdale and Hurstville, are also in mortgage distress. Financial stress is defined as less than 5% of income after expenses. Australia hit by historic interest rate rise. The RBA statement marked the first rate hike in 11 years since November 2010, and was a desperate attempt to curb soaring inflation, which has hit an annual rate of 5.1% and pushed prices to their highest in 20 years.